All right, here we are, merchandise inventory. We're going to work on the cost associated with each item that is sold and purchased in this chapter 6. So we have a few methods that we learn. We're going to learn, you would have learned FIFO and LIFO, uh, weighted average, and then specific identification. That's the easier one. So this video is starting off with the easier method. And so here we have Archer Spy Supplies. They started October with 12 cameras at $42 each. And then 4 days later, October 16th, they bought 40 of them at $68. So price went up quite a bit. And then on October 31st, they sold 34 cameras for $100 each. So the sales price of the cameras was $100. All right, so the first requirement is Archer Spy Supplies perpetual inventory record, assuming the company uses specific identification inventory costing method. This is easy because it tells us what each cost is for each batch that was sold. So of those 34 cameras that were sold, we need to figure out the cost for them. Well, they're going to identify the cost for us under this method. So they're saying 10 of those 34 those 10 cost 42. So they came from this batch up here. So we could say, okay, of those 12, 10 were sold. So 2 are left at $42 if we're doing an analysis there. And all right, we're going to do that down below in the chart. And then we have 24 at the $68. So of those 40, 24 were sold. And so we know that their cost is $68. And we can see 10 plus 24. Hey, that's the 34 that was sold. Okay, so we identified them all. So they want us to start by entering the beginning inventory balances. Put them in chronological order, calculated new inventory on hand after each transactions. Once all of them have been entered, calculate the quantity and total cost of inventory purchased, sold, and on hand for the period. That last sentence, that will help us with our journal entries. So we want to do that because that'll be where we get our numbers for our journal entries. So let's go ahead and get started. What do we have on hand? They started October with 12 at $42. So October 1st, the start of the month, they had 12 cameras sitting there in inventory at $42. All right. And I guess I can bring up a camera. You know, if you're super smart in math, you probably got it already, but let's just bring up a calculator for us because we'll probably keep needing that. All right, here we are. So that way you know what I'm doing. So we have 12, right, at $42. So we're looking at $504 for the total cost. We'll put that in that box. All right, cool. So now on October 16th, they purchased 40 at $68. So here's our purchases column. 40 at 68. And then, you know, if you're like, I don't know, I'm brain dead, I want to do this, I don't know how to do the calculation. Hopefully you can, but there you go. 2720. Let's shrink that down. All right, so that's that. What do we have left? Well, we sold 10 and 20, we sold 34, and we sold, and 10 of them were at this cost range and 24 were at that cost range. All right, let's first actually do, let me back up a bit. Let's bring down our totals here. So our inventory on hand for October 16th. We had the beginning at 12 for $42. So let's put that in first before I get ahead of myself here. You know what, I'm going to get rid of the dollar signs just to make it easier since we started them with the dollar signs already. And then we have right below that, right after that, we have 40. And that was at $68. And that total amount. There you go. Okay. And then, so let's see. Now let's go back to our cost of goods sold. So it sold 10 at the cost of 42 and then 24 at the cost of 68. So up here. So let's go ahead and plug that in for our cost of the goods are sold. So 10 cost 42. They told us that's easy math. We can do that one, I hope, in our heads. And then we had 24 or 68. Oops, what a 3. And then I can do that one for you. Let's do that one. 1632. Okay, so what's left? Inventory left on hand. Well, we started with 12 at 42 and we sold 10 at 42, so we only have 2, right? 12 minus um, 10, so we have 2 left at the $42 range, all right? And so 2 times 42 is 84. All right, so now what's next? We had 40 and we sold 24. So 40 minus 24, we have 16 left at the $68 range. All right, and then that would be, we can do the calculator. There's 16 times, all right, divide, nope, times, come on, 68. All right, 1088. All right. Okay, so we're done with that. That was everything. So now we just need to drop down, bring down our totals. So our total purchases for the October, the month of October, was just $27.20. Put a dollar sign in the bottom ones, right? To be a little neater. And then our total for our sales, our cost of goods sold, was $420 plus $1632, which is $2052. And I had said I'll put a dollar sign, so let's do that. All right. And then our total for inventory on hand is 84 and then 1088, which is 1172. Perfect. So we just added those up. Let's double check, make sure I did that right. There you go. Perfect. Confirmed. All right, so we're going to need these numbers for our journal entries. We got our inventory on hand. We have our cost of goods sold. We'll need that for when we record our sales. When we'll need to record our purchases. All right, so here we are, right to our purchases. Journalized the October 16th purchase inventory on account and the 31st sale of merchandise inventory on account. So let's first do the one that was the purchase. So that's October 16th. So we got some inventory. So we'll increase our asset of merchandise inventory. And that was the 2720, right? Purchases, the total amount, 2,720. And it was on account, so we have accounts payable. Perfect. And then we have the October 31st, the sale. So they say, begin by preparing the entry to journalize the sale portion of the transaction. Do not record the expense related to the sale. We'll do that in the next step. So this next journal entry down here will be recording the cost of goods sold, the expense. So let's just record the sale. Well, how much do we sell them for? Okay, that was 34 cameras for $100 each. So we sold 34 of them. Each were $100. So 34 times 100 is 3,400. So we have a sales price of 3,400. It was on account, so we didn't get cash. They said, put it on my account, I'll pay you later. So we're going to receive cash hopefully soon. So we have to debit accounts receivable, our asset that will hopefully become cash pretty soon. And I'm just going to put this in, since if you're writing your notes, that was 34 of them at $100. All right, that way you know where that number came from, because I did the math in my head, because that was easier one, right? Hopefully for you, for math. Okay, and then that we now get to record. We gave them the goods, so we get to record revenue. All right, now we're going to do the cost. So the cost of those 34, we had specific identification for them. 10 were at 42 and 24 were at $68, and that so both of those added up together is 2,052. So we're going to go ahead and record our debit to our cost of goods sold. That's our expense, the cost of those goods. And they are 252. And then we're going to say goodbye. We took them off our shelves. We don't have them on hand anymore. We only have 2 and 16. So it's 10 and the 24 left our shelves. So they're gone. So we have to decrease our inventory because they're out of there. So we need to reflect that with our journal entry to show that the inventory is now gone. And that's $2,052 worth of inventory that is gone. If you want to write in, I don't know, usually the books stop doing descriptions, but just in case, and so since you're learning, let's just put in our descriptions, something like to record cost of goods sold. And if we back up here, this would have been to record sale on account. And then up above would be in like to record purchase of inventory. And we probably should say not for cash, but it was on account. So identify a little bit better. So that's a good description. So that is it. That is it for this problem. That's not too bad. That was a perpetual inventory system, but and it was using specific identification. So one of the easier ones. And so in the next video, we'll do some other practice with our merchandise inventory.